down the hammer and pick up the pencil. You're about to listen to the Savvy Radio Show. Learn from real-life real estate investors, experience revealed with the Savvy Landlord as your host.
All right, Savvy Investors, what's going down? It's your friend, your peeps, Steve Van Kallenberg, the Savvy Landlord, doing it big on the Savvy Radio Show. Well, I'm trying to do it big. Hopefully it's going to go big for you on this one. Why, man, finding and hiring and interviewing an accountant. Yeah, it sounds fun and it's not, but it's so amazing that I do get this question all the time. How do I find an accountant? What do I look for? And I always wonder myself, why do you wait so long? But the funny thing is, I was that person years ago. You know, I've been investing for about 17 years, and I was a slow roller on that. So here's a couple of things that I Googled up and read. It says, we tend to think of accountants as numbers people, but a good accountant does more than just figure the numbers. Well, yeah, that's pretty obvious. Mr. Ed Lyon, co-founder of the American Institute of Certified Taxes, blah, blah, blah. But what about a good accountant will communicate what those numbers mean to you? And that's the whole gist of today's episode. You need to find an accountant. You don't just look in a phone book. You don't just accidentally call a few investors. And you need to find referrals. But what you do need to do is interview that person just like you would any other team player, an employee, whatever it is. You've got to jump on this as soon as possible. Don't wait to the last minute and interview this person. Seriously, numbers are the lifeblood of your business. And you know, I'm just confessing, but years ago, until I got some really serious, awesome people in my life, I would just, it's all about cash flow. I'm not worried about, the taxes. I just don't want to pay taxes. I don't worry about the accounting. I would just shove receipts. And then I came up with a plan with the receipts called shoebox. And then I just was unorganized. I just throw it into a spreadsheet. And then I would just figure it out later. And I was so small. But, that's why you stay small, is that the only way to go big is you've got to understand the numbers yourself personally, and you got to have the right team members, CPAs, bookkeepers, blah, blah. You got to do it. So here's my journey, man. So I started this thing from 1992. I've always been self-employed to about 1999. And 1999 is when I got into real estate. And so basically I just kind of blew that deal off. I had my head in the sand. I wasn't really concerned about the taxes. I knew enough about taxes and accounting. Actually, I didn't know a damn thing about accounting, but I knew enough that if you are classified as a student and you had a small micro business, you can get this thing called earned tax credit. And I kind of ducked under that for a long time and just, really didn't do any real estate, but I didn't know how to do my taxes. I didn't know how to take care of business, but I just kind of put my head in the sand. And then one day I got into the real estate RIA clubs back in 1999, and this amazing accountant jumped up there and was talking about 1031 exchange, and I was like kind of blown away. I never even heard what a 1031 was, and he was going off on the IRS, not like attacking the IRS, but going into all the cases that he had, and that he was an enrolled agent. It was pretty remarkable guy. And I called him up and he held my hand and got me, to the position where I needed to get my books organized. He filed my taxes. He was basically a power of attorney. What I had him do, and I had him to go back and sign all my, go back and double check all my past taxes to make sure that they were legit and I was good to go. And then one day, I had to get legit with my accounting. What happened was, that accountant was a good guy and he held my hand, but what I know now, I didn't know then, and that's what this podcast is that you don't know what you need to know. So this is why I'm telling you what you need to know so you can get the right people. And if you wanted to grow, you got to do this. So one day I was trying to buy this building, and I had a DJ company, and I was renting this small office, and it was a pain in the neck to carry my DJ equipment up these steps, and it was a good deal. And the location, the office I had was a good deal what I was renting, but I needed more space. But I, wanted to go to the next level, and I was just studying real estate and leveraging and refinancing, which I never thought I would ever do. And so, make a long story short, I was actually doing all the books myself at the time. And what I mean by myself, nothing, shoving it in an envelope and leaving it alone until the end of the year and trying to figure it out. Well, I tried to get a loan, and I refinanced 2 properties. This is back when no doc loans, it's a no doc loan. They would just write you the money based on the equity in your social security. What am I saying? I'm drawing a blank. Oh, your credit score. So I was like, boom. It was like one of my friends, an investor, one of my mentors, like, man, you need to go down to Bank of America, give me your social number. Boom, you can get some money. So I did that. I got $50,000, and I was ready to roll. And I found this amazing building. Put an offer in this building. It was 100 and listed for 159. I locked it up at 135. I'm going to move into this building. Bomb. I'm like $50,000 down. I only need a loan for 85, which it's like almost 50% of the value of the property. Plus, I'm going to stick another 15 in it just to pimp it out and make it all looking amazing as my office. So I call the loan up. Look, hey, Mr. Banker, I'm putting $50,000 down. I only need 85. The property's worth 160. Should be no problem. Oh yes, no problem, Mr. Van Kellenberg. Everything's good to go. I should let you know I gotta go to the board of directors and present your loan, and you know that story from there. So a couple of days later, and he's like, calls me back, hey, we can't do the loan. I'm like, what? Well, why can't you do the loan? I mean, I'm putting $50,000 down. It's a no-brainer. He's like, your financials are horrible. He's like, your financials are horrible. Say it again. Your financials are terrible, not horrible. And so it really slapped me in the face. Now, I didn't have a financial statement back there. I don't even know how many units I had at that time. I need to go back and figure that out. So I was kind of desperate, and I had to get a real legitimate, bona fide, giving me service CPA accountant that would help me with my financial statement, organize this thing called depreciation and scheduling and all this blah, blah. So, man, I found an accountant. She was an amazing woman, and she locked it up and held my hand and going down the road. Now, I'm thinking, so I did get the loan, everything, and I called this individual accountant, got a referral. Again, I'm blind through this drama. So this gal helps me out, lines me all out. Everything's great. And this accountant was pretty legit. They would ask me certain questions, but it was just always random, and it wasn't organized. And they were a pretty small mom and pop operation. They had a few clients, but they were really big clients. Nothing wrong personality wise, except for one day they would say, hey, it's time to talk to your taxes, to talk about your I'm like, well, why do we need to talk about it? I shouldn't be paying no taxes. Oh, no, you're paying taxes. And I said, why would I be paying taxes? I'm not taking any draws. I'm not making any money. I'm reinvesting everything. And boom. 2 things I learned from this accountant, thing called capital improvements. And so let me rewind. So this accountant, here's 2 things I learned. One, and she's like, you're going to pay taxes at the end of the year. I'm like, why? You paid off a bunch of houses. And I was like, yeah, I worked hard. I sacrificed. I didn't take no pay. I just, I was working my DJ deal, working the bridal deal, and any money I made, I'll just be knocking it down, paying down. And she's like, Steven, you're house rich but cash poor. And every time you pay off a house, that you're using capital improvement or capital dollars and from the business, and you got to pay tax on those capital dollars. And I was like, bam, it just slapped me in the face of how uneducated I was. And I was just irate. I'm like, I'm going to pay taxes. I worked this hard. I'm not getting any pay, and the government gets paid for my labor. And and I was just juiced, and I just slapped me in the face. Now, I was kind of frustrated with this gal because why didn't you tell me that? Like, she just assumed that I'm the super savvy landlord. I should know that, and I didn't know that. So, I took my lickings on that year, and I was like, okay, I got these houses paid off, which is not necessarily the smartest thing to do. So, I'm with this gal for a couple years, and then I remember on the third year, I'm with this gal, and she's like, hey, Steven, she calls me up one day. Hey, Steven, what up? You're going to pay $18,000 in taxes. I said, oh, wait a minute. Hold up. That don't make no sense. We took losses this year. We didn't do well this year. How is that even possible that I got to pay $18,000? And again, I had like convulsions from the last time because I'm uneducated. And I said, have you checked my shoebox account? She's like, what's a shoebox account? I said, oh, girl, you don't know about my shoebox account? Well, what was wrong was that I thought that she had access because she had access to all my bank accounts. I thought she had access to all my receipts, my repairs. And she came back a couple of days or a week later. Yeah, you're getting a return on your taxes. Now, the reason why I'm getting a return is because at this time, my wife had a W-2. So it makes sense. It balances out as a real estate investor and the losses that you take and the deductions and the depreciation and the repairs. So I was rolling. And then, so from there, I'm going good. And that accountant couldn't handle it. I was buying a bunch of properties. I don't remember how many properties I was buying at the time. And then she was growing her business, and it just, nothing negative. She came up to me one day. She's like, hey, Steven, you need to find another accountant. And man, it was like getting broke up with the girl. I was like, oh, it's not me, it's you, and I got to let you go. I was like, oh, no, you didn't just do that to me in the month of November. This accountant was amazing, and she locked it up, finished my taxes, everything's cool, got me clean so I can move on to the next person. Now I'm moving on to the next person. Now, this is why you got this far. If you've gotten 12 minutes into the podcast, you obviously are engaged in what I'm telling you about to tell you. And this is where stuff started rolling for me, and I started really getting serious about accounting. So I called some other real estate investors, and this is really good. And the reason why you need to use the RIA and build, who's the accountant that everybody's using? And so I modeled a real estate investor guy that had way more properties than me. Like, he has 500, 600 properties. And I'm like, hey, bro, who's your accountant? Which is kind of an awkward situation to ask somebody. It's like, hey, what color is your underwear? And they'll be like, why you need to know? But I was like, hey, man, I need to find a new accountant. And moving from one accountant to another accountant is just drama in itself. And so this is why, if you do this on the front end, interview your accountant and build a relationship, and you know what you're doing, you can move on and grow. I did not know, and I'm glad that accountant helped me move to the next level, but I had to get to this next accountant. I get to this accountant who is real estate everybody. But man, the guy did not give me the service that I needed. He was a very smart, savvy accountant, but I never heard from him. I had no idea what was going on. And I knew at the end of the year, I was just this lazy real estate investor. Oh, I don't have to pay taxes. Ding, ding, ding. I'm moving down the road. And, a lot of things I noticed, and this is where you can write this little golden nugget down. This is where I've been practicing this for years. After my accountant gets the taxes done, I move on. I get those taxes, and I call another CPA, and I ask to hire them to review my taxes. Usually it costs me about $60. I usually call someone I don't know, or I find someone through a referral, just in case I need to build a relationship with a new CPA / accountant / bookkeeper, and I show them my tax returns. Back then, I found, I got this new guy, and I was kind of sketchy with this dude because he never really communicated to me, and it kind of frustrated me. And I needed bookkeeping service, and it's just crazy where I'm like, I'm willing to pay for service, and he would never get back with me on it. I got emails to say, hey, I need to set this up, and he would just blow me off. I mean, he was a nice guy, and I don't know if he had bigger accounts. Now, I'm not saying I'm a small guy, but any money that you're going to pay for service, you at least need to get a response, or like, no, I can't do that. And so I had another accountant look at my taxes, and they said, hey, all the numbers jive, but they're not lined up. Like your depreciation is not necessarily equal and all this other stuff. And again, I didn't know what I'm doing. And so then I had to move on from there. And that's where I'm at right now. And it's a long story. And I know I've already jammed up 15 minutes of your life. So here's the point. Not all accountants are equal. They do make mistakes. They have different personalities. There's the bad ones that don't communicate well to you. So I'm going to break off a bunch of questions that you need to know, and so you can be informed and hire the very best accountant possible. So the first thing you need to do, and I do this in every relationship I try, is you got to start with their background. Basically, why did you? So now we're getting into the interview process. So that was my story. This is where I've been. I know, when I do these podcasts super early in the morning, I'm not real organized, so bear with me, but I'm going to get into it right now. Now we're getting into the podcast. It's like the 15-minute intro. So you need to sit down with this accountant and face-to-face, and you can't be weak about this, ladies and gentlemen, boys and girls. You've got to do this. This is your life. You are responsible when the IRS jams you up, I have some friends that have been through audits, and it's not easy, okay? And it sounds easy, and a friend of mine went through a whole audit, and it was a $1,200 discrepancy. It was put into the ledger twice. Come on, IRS. What's really going on? But when you sit down with somebody in general, you find out where they came from. Like, I just start off real slow and said, well, like, why? Like, basic question, like, why are you a CPA? Why are you an accountant? And so that's usually you're starting off with a relationship and just seeing, their eyes shift. What are they talking about? And then, another question is, what type of business typical customers do you have? And, you don't want to come out and say, hey, I only do real estate. Just find out what their niche is, and find out where they're doing. Is there any specific, what do you like to do? And then how many clients do you have in this specific business? And so, do you have a real estate guy? Who are they? And when I moved on to my new accountant, I was actually the largest real estate customer with the most units. And I was a little nervous about that. And when I sat down with my accountant the first time, he seemed a little bit too conservative for me, because right at the very first meeting, and I realized this now, he was trying to punk me and say, the IRS is coming down on repairs. And I was like, whoa. I had to move the microphone on that one. Whoa, slow down, homie. I know they're cracking down on, some real estate investors are taking advantage of what's a repair versus a capital improvement. And that's on another episode. But I was like, okay. But you got to start the dialect and start figuring out, what type of person they are. Are they going to be willing to die for you if the IRS calls you? So let's just get down to business. What kinds of services do you provide? Is it QuickBooks, just tax return, tax planning, tax advice? Ask them those questions. What kind of services do you provide? Ask them, how many years have you been an accountant? And then, I know these are just simple, you can Google these up, but I just want to hammer these home. You need to start developing a relationship. This person has your social security number. This person is representing you to the IRS. Yes, you ultimately sign off on this stuff. You need to know. What type of clients do you work with? Who do you like to work with? What are your percentage of your clients do have income producing real estate? And so another question that I ask that's pretty, I try to ask this, in an easy way. Do you own any real estate properties yourself? And then I find out, are you an entrepreneur yourself? Or is this just a job? And hopefully by then, you're about 15, 20 minutes in the conversation. how did he get to this point? My accountant, if you want to listen to, I can't remember what the podcast is, what number, it's like in the 160s. He's a straight entrepreneur. He bought the business and he got into real estate by accident. And he actually owns the building that he's in right now, his office. And so I was getting excited about that when I was interviewing him. How long have you owned the building? And then okay, so that's that one. All right, my mind's going buck wild. Here we go. Okay, here's another one. What's your availability? Can you be reached? Also, I asked this question, and I don't know if it's rude or what. How many clients do you have? And then I factor in the numbers. Like, if he has like 3,000 clients or 100 clients times X amount, where are they going in their business? How long they've been in business? Not how long he's been doing accounting, but how long has his business been in business? So that's an interesting question. And then if he bought the firm, or does he have partners? You need to know that. What's your experience with the IRS? Has any of your clients, have they been sued? And so, and then how'd you handle that? Have you dealt with an audit? Now, you just don't throw up on people, but what I'm trying to say is that you've got to get these questions, and I would listen to this part of the podcast a couple of times or write this down and kind of have these questions on paper when you go sit down and interview this person. That's kind of what I do, because I get all emotional about taxes and the IRS. I do. I don't know what's wrong with me, but I do. And I just get all nervous about it. I'm thinking I'm going to die or something. But when I walk into a meeting with the accountant, I always have questions, and I try to get as much information as possible. Here's a loaded question that I try to throw out there. And actually, I'm kind of psycho. I want to know what their response is. And I'm like, are you a conservative or an aggressive accountant? Now, I may make this funny, when I'm asking them, like, are you conservative? Are you down with Hillary? Are you down with Trump? I'm just saying, I don't say that because I don't want to get into the political BS. But are you a conservative or aggressive? And yeah, I love the answer that Mike, as much as I'm allowed to take, I'm going to get all I can. And so I liked his response. Now let's just get down to the things that you need to know before you say yes or no to this accountant. Who will be doing the work? Okay. Who else in the office will be handling my books? Is this a group thing, or do I have one person? And how it goes for me, I know the CPA. He's the owner of the business, and I think he has a couple of bookkeepers under him. He may or may not have another CPA under him, and I have a dedicated one gal that I deal with on a regular basis that does my accounting. And do they have? And then the next question is the person that is rocking me, my bookkeeper per se, or my assistant. I don't know what the heck you want to call it. Does she have real estate experience? And in my case, I actually knew her before she moved over to that real estate firm, to that accounting firm. And so, yes, and yes, she knew real estate. She knows what's up. And I have a dedicated person's phone number. And then if I need to step over that boundary or whatever, I have access to both of them, and to make sure we're on the same page. The next thing you need to find out is, what does it cost? Is it based on hourly? Is it based on a service? Is it annually? And so in my mind, I pay for bookkeeping there, and which I'm trying to bring into the office internally. So I have a regular bookkeeper that comes up to the office, and I'm not OG yet. I don't have that type of service. So I pay for a monthly service for my bookkeeping, and within my bookkeeping, they reconcile all my bank accounts. And I mean by bank accounts, credit cards, checking accounts, all, when we shift money around, they're involved, and I send them the HUDs, and then I also pay them for my personal taxes and my business taxes and so on and so forth. So those are the two charges that I asked. And then when I'm asking those questions, I'm like, hey, can you help me? And this is a kind of just an open question, just to get the ball. What ways could I save money on taxes? So I asked that question. Another question that I ask is there a contract, an agreement? Since I've been doing this for 17 years, I've never had anybody jam me up, ask me for a contract, that they're my dedicated accounting person. Now, I've seen some big organizations try to do that, and you're paying for a service. I don't think you necessarily need an agreement. So some accounting firms trying to get you to sign something, I don't know if that's necessarily the best idea. One is that they got your social number. They basically got your BALLS or ovaries, however you want to roll with that. And if I'm not agreeing with this contract, like for example, I want to move to another accounting firm because the girl flipped me off or something, and then they trying to jam me up on a contract, and then they can hold me hostage. And man, and I'm trying to get another real estate investor to tell me his accountant, man, locked him up with some handcuffs. And that's a horror story that I wish I could get out there someday, and my friend won't let me tell that story, but man, one day I will. And some sketchy, shady stuff can go down with your accountant. So you need to make sure you know what's going on. Always ask for referrals. And you got to be sensitive in the situation, that they got to be willing. Like, I'm a referral for my accountant, and a lot of real estate investors ask me about them. But, when you ask for the referrals and not real gingerly telling you, hey, call, blank, blank, blank on blank, 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 it's confidentiality. But, I've already had that relationship. I've already had my accountant on the radio. So I'm trying to help his business, because the more I help him, and I believe in that Zig Ziglar philosophy, the more I help other people are going to help me. So if you're asking for a referral right at the gate, they may not be too keen on that. And don't take that as like they're trying to hide. Think about confidentiality agreement. Ask them about, creative ways that you can save on money, like the medical tax or the medical expense reimbursement. Now, my accountant blew my mind the other day, and I've been to all the real estate guru stuff, and buy my course, and you could, I don't even know the freaking terms, but you can get this HESBA or H something account and tax deferred, and you can borrow. Yeah, my accountant knew about all that jazz. It blew my mind because I don't even know about all that jazz. Another thing that I like about my accountant right now is that the Obama plan, and my accountant knew all that jazz, and how to use it and how to utilize it. And, there's certain levels with Obama plan. This is amazing. And so what I'm trying to say is your accountant needs to be up to snuff on what's going on. And you have to realize that you might need to pay a better accountant that is on top of stuff, so you can get the benefits from that. For example, my wife doesn't work. We used to have, super insurance. She used to work in the hospital. And, that was the main reason why my wife wouldn't want to work, is because, man, she quits. And I think that's every fear of every real estate investor. If I quit my job, I don't have insurance. And I just think that's just a lie. And Obamacare, which everybody dogs Obamacare, and, I don't know a lot about it. And who knows if it's going to change. But it has been huge for me, where if you get paid under a certain amount of number, you qualify for this. And so my last year's taxes, we took some losses, and I didn't take some pay, and I sold the business and blah, blah, blah. And I ducked under a certain level of Obamacare, and I got more money paid back than I was paying on my premium. I was actually overpaying my premium. My tax and actually the bookkeeper realized, she's like, how much money have you been paying? I've been paying about $400 or $500 a month into the Obama plan, and blah. I got money back. And so, again, I don't know if my last accountant, I never even had a conversation with planning. And so you got to find that, you got to ask these questions. You got to develop a relationship. And then here's another question that you need to ask them as you're winding down. How do you handle other multiple entities? Are you going to charge me more money to file more different taxes? Is it going to be, I have a bunch of LLCs, I have a bunch of accounts. Is that going to cost me any more money? Are they going to be willing to give you advice on which LLC that you need to go with? Is it going to be an S Corp, a C Corp? Why and what? And what do they use? I always ask that question. And then here's another question. How do you bill for your services? I know that's a pretty simple. Is this going to be a monthly thing? Is this going to be a yearly thing? Because at the end of the year, you get this $7,000 accountant bill. You need to plan for that. And so hopefully, I know this was kind of a wild 30-minute podcast, and hopefully this helps you. If it does help you, let me know, because I got more material that I would love to share with you guys. But these are kind of deep in some level, and then they're at some level, they're kind of surface and pretty common sense. So here's a couple final thoughts. Number one, don't compromise. Stop being a punk about this accounting information and you don't know about it. Get with somebody, go have lunch with somebody and ask them what they're doing. That's usually what I normally do. Years ago, when I didn't know what I was doing, I would try to have lunch with as many people as I can, and I would ask the same question to several different people and see what consensus. What corporation do you do? What LLC do you do? Do you do it yourself, or do you have an attorney? What's that attorney? And then you ultimately should go with your gut. I knew my past accountant wasn't giving me the service, and I was just putting my head in the sand because I wasn't paying taxes, and everyone else uses this person. But then next thing you know, he didn't do me wrong. But for me to go to the next level, whatever that may be, you need another accountant cheering you on, growing your business, strategizing, and making it worth. And it's been worth every penny for that. Another reminder, make sure you go get a second opinion. Go with your gut. So number one, don't compromise. Number two, go with your gut. Number three, get a second opinion regardless. And just for fun, people get human. I mean, we all are human. They don't get human the way we think that they're machines. They think that they're robots. But, $60 to hire an accountant for 1 hour just to look at your taxes could save you thousands of dollars. Anyway, hopefully you're doing good. Hopefully this was empowering. My name's Steve Van Cower, the Savvy Landlord, doing it big on the Savvy Radio Show. Appreciate your time. Save money and go buy assets.
Thanks for listening to the Savvy Radio Show. Glide online and listen to our other motivating episodes at savvyradioshow.com. Connect on Twitter at LandlordBook and always be buying assets.